You're listening to ChainLeak, the crypto news podcast with your host, Joshuwa Roomsberg. Follow and subscribe today.
Welcome to the ChainLeak podcast. I'm your host, Joshuwa Roomsberg. Today's episode is about a BlackRock fund on Hedera, featuring Archax. Today's guest, Graham, the co-founder and CEO. Welcome to the show, brother.
Thanks very much for having me. It's great to be here.
All right. So yesterday, some big news was announced that you guys have tokenized a BlackRock fund and put it on the Hedera blockchain. Can you confirm or deny if this is a true story?
Yeah, I certainly can. It is a true story. As you phrased it there, is exactly what happened. So Archax is a regulated custodian exchange broker in the UK. We have our full crypto registration as well. So if you think about a world where a company can operate with securities and one where they can do things with crypto, we have both these permissions. And when you combine them together, we can also do things with securities on chain as well. One of our clients came to us, asked if they can invest in the BlackRock money market fund. So we invested in them, and then we tokenized that interest in the fund. So what does that mean? So if you think about it like a stable coin, you invest currency, it goes in a bank account, and you get a token that's backed ultimately
that represents
by this fiat in the bank account. Whereas what we've got here is the BlackRock money market fund held in our custody, and we issue a token backed by that custody. And those tokens can be issued and transferred to anyone like any other token.
Okay, now when it comes to the custody of these BlackRock funds, who holds the custody and what authority do you have to go through to verify the validity?
So Archax is a fully regulated custodian. So we are able to hold the BlackRock money market fund for our clients. They're held in a nominee vehicle, insolvency remote, completely protected from Archax's balance sheet. So this is a typical structure you'd see in any traditional custodian. Then Archax can hold the tokens as well on behalf of our clients. So let's say you wanted to invest in the money market fund. You can do that. We can issue tokens. We can hold them for you. If you want to withdraw them to your own wallet, then we permission your wallet. So this is one of the cool features of Hedera actually, is that you can make sure that you can only send them to permissioned wallets, and the person receiving them can make sure they're permissioning the incoming token. So you can kind of avoid all of these airdrops that you don't really want to participate in, but say the assets that you want to hold in your wallet.
How do you go about making a Hedera wallet permissioned?
Well, you can do that from in the contract. So we've got the functionality built into our tokenization engine where we can permission the warrant, the addresses to be permissioned, and the same is true on the other side. The user of the wallet can permission smart contracts for receipt as well. And we've on our tokenization platform, we cover a lot of blockchains, so we can tokenize on Ethereum, Polygon, Hedera, Algorand, XRPL. We're looking at some others, and some of them, like Ethereum and Polygon, we've built whitelist functionality to permission people, blacklist functionality for sanctioned addresses and the like. But actually, Hedera has some pretty cool features for institutions in that it kind of has this auto blocking of everyone function natively built in, unless you permission people. So it's quite useful when you're trying to have it with securities. What we really want to avoid is creating a security that people then send around everyone in the world. I know the dream of DeFi and Web3, if you like, is to have securities that way, and I believe in it too. But right now, the regs don't allow it. So we just make sure we know who owns what and where.
Okay. So there's a KYC process behind each wallet that holds this BlackRock fund?
Yeah, exactly. Yeah, and a little bit more. So at the moment, we have to not only do AML KYC to make sure we know who's holding it. We also have to do an assessment on the investor as well to make sure they're appropriate for the investment type. So crypto doesn't quite have the same level of kind of sophistication tests, if you like. But for securities, Archax makes sure everyone's a professional that holds them at the moment.
So right now, this BlackRock fund is only available to institutional investors?
It's available to professionals in the UK. So you can think about that a bit like accredited investors in the US. So everyone by default is a retail investor. And then you can elect up to being a professional investor.
Okay. Now, when it comes to the Hedera blockchain, What was your reasoning behind choosing the Hedera blockchain for this specific BlackRock fund?
Yeah, so we've got a bit of history there with Hedera. So back when we were setting up the exchange, we originally wanted to create our exchange so every transaction happened on chain. And
Okay.
the only network at the time, this was 6 years ago, that we kind of thought, okay, maybe that could do it was Hedera because it had this high frequency.
Yep.
In the end, we kind of, we don't think it's there yet, but the high speed was one of the only ones out there. We got a grant from them back in the day to start tokenizing with them. We learned a lot more about them. They've got some good functions. I mentioned the permissioned one just now. That's really useful if you're an institution. The
Right.
fees are fixed, so the fees never change. If you're an institution trying to build a business model around a chain with fluctuating fees, then that can be a big problem. It's EVM compatible as well, so it kind of can be attached to a lot of other networks. And then in terms of the governance structure, it's got a governing council and Aberdeen Asset Management, who are our largest external shareholder. They're on that governing council as well, so that played a role in why we ended up working with Hedera, and we just found it to be a good chain to operate on.
Okay. Now, a thing I was just thinking about, and I want to circle back on the amount of this BlackRock fund that you guys are holding. Just to be clear, it's not the whole fund. You guys didn't move a whole
No,
BlackRock fund on chain.
no, exactly. Yeah. So if you imagine from BlackRock's point of view, they've got billions of dollars in this fund. They've had billions of dollars for a while. Certainly, I'd love it to all have come through Archax, but it hasn't. And then imagine that they've got a cap table somewhere which lists every institution that holds their funds. There'll be all the biggest wealth managers out there, and one of those now says Archax. So from their point of
Okay.
view, we have a holding in our fund, and then underneath on our side, we have a list of our investors that are holding that fund. So we have two investors on our side that are invested in the fund at the moment, and that's in the US dollar fund. But they're all available now through Archax. So, if someone has some treasury needs, we already have Aberdeen and BlackRock's funds available on our site to our clients. They're going to be more automated into our workflow soon, so you can buy them alongside crypto on our site. And we've also got other investment managers coming in the future. So, and it's the same for all of those guys. There are actually a couple of instances where we're working with them to tokenize whole funds, but for the most part, we're a participant in a pre-existing fund.
Now, I was looking at the website earlier for Archax, and I seen, I want to say, 3 different BlackRock funds. Do you guys have more than just the US Treasury Fund on chain right now?
Yeah, so what you're seeing there is actually 3 different currencies. So we've
Okay.
got GBP, USD, and euros. And the other one that we've got up there right now, the Aberdeen funds, is pretty much the same thing. We actually, I believe I'm right in saying that we have the capability of having a few more BlackRock funds up there. And on the Aberdeen side, we have about 70 funds up there. We're just seeing
Wow.
so much demand at the moment on the money market side of things. These tokenized money market funds, they've got a lot of regulatory constraints around them. But if we just ignore that for a moment, from a functional point of view, they're like yield bearing stablecoins. And you've got,
Okay.
what is the number? I don't know, 100 billion or so in stable coins right now, and all of those people are giving up their yield because they want this currency that gives them the liquidity and transferability. So I really like the idea of a world where you've got tokenized money market funds or you've got tokenized deposits where people are earning a yield on their assets.
Another thing I was just thinking about when it comes to the yield and any potential for earning interest or dividends, how does that work? And is it specific to a blockchain, or would that be for any tokenized funds in the future?
Yeah, again, a good question. So one of the things that we're looking at in the space is this whole idea of life cycle management. So not just in funds, but in any form of equity or debt, you get distributions of interest, you get voting. So we want to put as many of those on chain as possible. So, you have these income funds that distribute cash. We've already got the ability to airdrop into people's wallets. Obviously, you can't airdrop cash, but we can certainly airdrop stablecoins. We
Right.
can also airdrop more of the same unit. So imagine that you hold what would be called accumulation units in a money market fund, which means you just get more units over time. Every time you're due more units, we can just airdrop them into your wallet. And it's these kind of
That's cool.
operational benefits, which is why so many financial institutions are looking at them. I mean, there's a whole array of efficiency gains from using a blockchain for some of these instruments, but the life cycle management is one that really isn't talked about, but is a huge gain for the whole industry.
What types of percentage do you see on the return side for holding these types of assets?
I mean, they're they're in line with base rates. Most of these money market funds. So depending on the currency, let's say it's between 4 and 5.5% at the moment. So not crazy for some sort of DeFi farming product, but in terms of
Degen,
a
yep.
stable yield, yeah, like it's in a pretty good place. Especially like I love stable coins. They enable the fluidity across most of what happens in DeFi at the minute. But as interest rates start getting higher, you are kind of sitting there going, okay, it'd be nice when I'm not using my money to get a return on it. And this is one way that people can.
When it comes to an end user who wants to potentially become a professional investor to be able to hold some of this BlackRock fund on chain, what is the process they would have to do to meet your requirements?
So there's a number of tests that you have to do in the UK. One's a quantitative test and one's a qualitative test. The quantitative test is, how much are you worth? How much do you earn? How often have you traded these types of products? And the qualitative test is a series of questions to make sure people understand what they're trading. From a retail point of view, Archax doesn't currently have the ability to distribute these products to retail, but there are a number of brokers that may be connected to us that can. So one of the partners you would have seen in the announcement, for example, is Onera. Onera is run by a gentleman called Ami Ben David. He was actually one of the guys that tokenized Spice VC, one of the first tokenized VC funds back in like 2017. And they've built a network that hopefully is connecting to all these different institutions over something called FinP2P. So there's an example of where we'll connect to other professionals like banks and institutions, and they in turn can distribute onto their clients. So, we're hoping that these products become more distributable like traditional products over time.
Okay, so when it comes to the different types of assets that are available by Archax, you mentioned you guys have other assets in addition to this BlackRock fund. Is there any exclusivity to a specific blockchain, or do you have a vision for the future of going cross-chain with these types of assets?
Yeah, we're we kind of say we're chain agnostic. So what does that really mean? We're commercially driven. We want to work with good chains, good networks, good development communities. But ultimately, if a client, a tier one investment manager or bank especially comes to us and says, "Hey, we want to work on this chain," then we will. So we can tokenize already on Ethereum, Polygon, Algorand, Hedera, XR, PL, and we might add more in the future. And I wouldn't say we're necessarily a target in a multi-chain world. I think you'll probably end up seeing some chains being used for some specialty and others being used for another. So, for example, one might be really good at developing bond life cycles, another one for equity, another one for gaming, another one for memes, whatever it may be. I think you'll maybe start to see these divisions. But certainly, if we're trying to fix some of the inefficiencies in the current world, it's going to be a bit of a bad outcome if everyone has their own chain, cross borders, different chains. The smart contracts are all different and they can't interact with each other. We just end up with the current ecosystem where you end up with ADRs, GDRs, and all of these other wrapped products existing globally. So
would it be easier if the cross-chain capabilities were available for EVM compatible blockchains?
Yeah, there's quite a few solutions out there in a minute looking at kind of cross-chain and bridging. A bit of the challenge is that if you're building a security that has some controls built into it, like permission,
certain controls are only available on certain blockchains.
Exactly, and then any time you use a bridge, you can either pause and mint, or you can burn and mint. Sometimes you can create wraps. You then introduce loads of potential security issues when you go
vulnerabilities
cross chain.
Yep.
Certainly, if you're going EVM to EVM, then it's not so bad. I mean, in an ideal world, there's a lot of people working on bridging solutions. We're talking to a lot of them, but in an ideal world, everyone would be connected on the same asset. Like the BlackRock money market fund we've tokenized, it would be great if that token could be held by every institution, every consumer globally, and transferred to everyone. And just wherever it was determined how the token interacted. So kind of like geofencing of a token or geo controls on a token. That might be a pretty cool way to go.
That'd be sweet. Now, when we come back to this money market fund that is created by BlackRock, you guys tokenized it on the Hedera HBAR blockchain. Is there a specific reason you chose HBAR over any other blockchain that's available on the market today?
Not really, to be honest with you. So we usually our clients would tell us which chain they'd like to work on. In this case, the client was interested in getting exposure to the BlackRock Money Market Fund, and they didn't really mind which chain it was on. So Archax could choose one of the ones that we had available to ourselves. For the reasons we mentioned earlier, we were able to, we notified BlackRock of what we were doing. We wanted to make sure that if we put it on a chain, it wasn't going to receive a lot of airdrops. It wasn't going to have any sorts of issue that we could foresee. So we know with Hedera, we've done it before with Aberdeen. We knew it would be, a pretty
because
safe
of the
bet of
permissions.
Yeah, because of the permissions, because of the governance council, just because of the transaction costs, because it's got good green credentials. I think arguably is one of the most sustainable blockchains and is even carbon negative. I mean, I know have a lot of claims, but it's pretty strong on its claims there. So you kind of look at it, go, okay, cheap, fast, institutional, permissioned, public, and green. It's kind of a bit of a safe bet. And we're trying to, I know crypto Twitter ran with the news a little bit, but we're trying to build long established relationships with these investment managers because we believe in the future, this is how all investment and all distribution takes place. So we're just, we're treading carefully, and Hedera felt like a safe bet for what we were doing.
Okay. Now, earlier we talked about your relationship with Hedera, and over time, you have built this relationship with BlackRock. How did that come about? Did you guys reach out to them? Did your partner recommend it? How did it come about that you guys had to, I don't know if it's an announce to BlackRock or if you spoke to BlackRock? How did that come about that BlackRock is aware that part of their fund is on chain now? How did that come about?
So, we've been around 6 years and we've gone out of our way to do everything right. Like our belief from the start is everything's moving on chain. And if you believe everything's moving on chain, then institutions are coming and partners need to be credible. So that's why we got regulated first of all. So we built these relationships. We probably spoke to someone at BlackRock about something 5 years ago, and that may not have led anywhere, but hopefully we're credible. Those conversations go on, and as they're trying to learn, you become more aware of each other. Now, there's some specific payment regulations in Europe that I won't bore you with, but the outcome is that certain payment firms in Europe can only invest in money market funds which have exposure to government debt. And the BlackRock fund is quite unique in this regard. And when we discovered that, we just reached out to the team and said, hey, we've got clients that are interested in your fund. We're a regulated broker, custodian, exchange. Can we invest in your fund? And of course, the answer is yes, because they want more assets in their fund. Right. And then we explained to them who we are. And as you develop that relationship, we said, look, we're going to tokenize it. There are books and records. They're not your books and records. It means effectively our beneficial ownership records will be on the Hedera network. And when we do that, we're going to run past you the announcement. So that's what we did, So it's kind of, some people on crypto Twitter, like, how involved were they? I mean, it's kind of one of those, like, what does that really mean? Like, right. I've been talking to them for years. I have great respect for them. They couldn't have dealt with everything more professionally. They've been super open and honest in every dealing with us, and we've tried to do the same with them. They were aware of what we're doing. We made sure we followed what they required of us in the press release, and and that's it. So involved, no. Aware, certainly. And hopefully, through this relationship, we'll demonstrate some of the advantages of of putting the assets on chain. I mean, they're fully aware of it. The BlackRock team are ahead of the game, I'd say, compared to a lot of other investment managers.
When it comes to tokenizing your share of this BlackRock fund, is there a certain percentage of your holdings that you guys are putting on chain, or are you putting 100% of your holdings on chain, that fraction of your ownership within the BlackRock fund?
No, it's 100%. But
Okay.
if a client asked us not to, we may not. But really, it's people shouldn't really mind. It's our books and records. In any broker in the world where you go and buy your, whether it's Tesla shares or Vodafone shares or whatever it is, you see them on your brokerage account. You're like, oh, I own them. You own the beneficial ownership rights. Usually, it's held in someone else's street name of your broker. This is no different. Archax
Right.
is the street name, the legal title holder. And then someone has the beneficial ownership with us, and we like to put that in token form because in the future we want to see those mobilized and transferred and moved around. And in the announcement that we made, you'll see that we call those beneficial ownership token or bots. And these bots are securities in their own right. So they are securities. They can be transferred. They behave like securities. They look like traditional securities in that they're not legal title, but they're not on the records of the asset manager. And it's one of these things which is a bit, it's a bit of a detail, but, people kind of want it to be natively digital. And I get why. It's the kind of,
Right.
it's the vision for all of us. But the reality is, ostensibly, this is no different at all. You hold a token, it represents what you own, much like it would in the traditional world. I can pay a dividend direct to your wallet. If you can transfer it to someone that I've permissioned and transfer ownership. And we're starting to see ways that can really change the financial system.
Do you guys have any plans in the future to bring this specific US Treasury BlackRock fund to multiple chains?
No, but if a client comes to me tomorrow and says, I'd like to invest my treasury, we have a lot of payment firms, a lot of startups that have raised money. If they come to us and say, hey, look, I'd like to raise money, can you tokenize it for me? And actually, I'd like it on Ethereum, Polygon, Avalanche, whoever, then, we know a lot of these guys. We respect their communities. We want to do whatever we can, and we want to give our clients a good service. And the world's kind of split like a lot. I mean, it's kind of in three parts, really. You've got clients, institutional clients who only want to work on private chains. Then you've got those who have a very specific public chain they like. And then you've got those who really don't care. And they're a bit like, hey, we know that tokenization is the future. We don't want to be disrupted. Take us on a journey. And for those guys, we'll kind of talk through, look, this is what Hedera is good at. This is what Ethereum is good at. This is what XRPL is good at. You guys pick, and then we go with them. This is really just about giving our clients,
What they ask
want.
for. Yeah.
Yeah.
Okay. Now, when it comes to the liquidity on Archax, how do you guys get liquidity for these types of assets?
So these it's a great question. These assets currently are, most of them they're called T0 or T1. That means if you ask for your money back, you can usually get it back today or tomorrow. And it usually depends on the time of day that you ask for it on. Now, Archax is a regulated exchange as well, which means that if we can find a way to make these trade real time, then you won't have to wait like you've had to wait in the past. You'll be able to redeem them instantly. So, we've been working with Aberdeen for a while. We've been talking to them about how do we make these things real time realizable. You would have seen recently the BlackRock announcement with Circle. That was a pretty cool announcement where Circle are allowing you to effectively transfer your BlackRock fund directly in. That's not the same as a real time fiat redemption. So, we're talking through a few options at the moment. It's quite a tricky problem to solve because of various cost of capital issues, various regulated market maker issues. But Archax has the exchange where these can trade, and we have the products. We just need to start building the market. But the vision of the future is all of these assets will be able to be traded on a secondary market and facilitate whatever liquidity is available.
When it comes to Archax and these types of tokenized assets, do they trade 24 hours a day like the crypto market, or are they like the stock exchange to where they have set hours that you can trade these types of assets?
Yeah, so Archax is 24/7. You can already trade crypto with us 24/7. The securities, if I was to put them on the market, you could trade them 24/7, but there's currently no market makers there because, we need to build out that side of our business. But theoretically, if I was to start a market today on the BlackRock Money Market Fund, you could go and place a buy or a sell, just someone the other side wouldn't match you. The reality is that the whole ecosystem has some way to go. We need to build out clearinghouses. We need to build out central securities depositories, and we're actually building a central securities depository like DTCC or Euroclear in Luxembourg right now, which will be 24/7, and that will enable you to create and redeem securities on a real-time basis. So, some of that stuff is coming, and it's arguable whether everyone wants 24/7 markets, but we're certainly capable of facilitating it.
Okay. Because that's something I've seen as I've been researching this week. I've seen a lot about different types of asset managers wanting to go to a 24-hour cycle, the same as crypto, to where if there's money to be made, they want to be on the books with it.
Yeah, I think the crypto ETFs for me are the type of product that should be 24/7. The underlying is trading 24/7. The ETF can trade on Archax 24/7. We haven't gone there yet. We could. Then there's this whole private markets piece, owning equity in smaller companies. Those things are going to struggle for liquidity. It's probably better that they trade in an intermittent trading venue, so like quarterly auctions or something like that, where you restrict the trading window. So it just depends on the asset class, really. What I think is kind of the future is, at the moment, let's say you need money on a Saturday night, you can go to any of these places like Aave or Balancer or whatever, and you can borrow some money against your crypto. It would be pretty cool if you could rock up with your shares at the weekend and borrow money against it. So maybe not the secondary market piece, but certainly opening up, the ability to use it as collateral, borrow against your RWAs. I think that's going to be happening probably this year.
When it comes to wallets and storing these types of assets, do you have to store them on Archax, or do you have to have a personal wallet with certain capabilities to hold these types of assets?
Yeah, so we have three options for you. So we have an omnibus wallet, like most exchanges. It's all held insolvency remote from Archax, but you can pool your assets with other clients that are held protected from us. And we use various custody solutions for that. So Metaco, now owned by Ripple, and Fireblocks as well. And then we've got our own solutions as well. And then separately to that, we have segregated wallets. So if you want to hold assets with us, but you want them completely separately in a new address, we can do that as well. If you want them in your own name, that's fine. We need to whitelist your wallet. You need to verify it's owned by you, and then we can transfer it to you. So that's really a non-custodial solution. So in that example, we're still holding the underlying asset, but you're holding the beneficial ownership token, the bot that we mentioned earlier, directly in your wallet. And through our system, we can see on a real-time basis everyone that holds these tokens. So we can see those ones that are held internally, and we can see those ones that are held outside. So if you, Joshua, send it, to Simon on my team, we would see it move on chain, and our records update automatically.
Within the Archax exchange, do you guys create a new wallet? For this example, HBAR, Hedera, do you guys create a Hedera wallet for each user on the exchange as a whole? Or as they need certain types of assets, you guys would create a wallet?
Yeah, it depends on the situation, really. So in this example, we put them into our standard wallet, but some clients come to us and specifically say, look, we want to hold these completely separately. It also depends on the use case. If it's something that's trading in our secondary market, we tend to try and have the assets in the same place for just ease of operation. But obviously within that, we've got various treasury, liquidity, security things that have to coexist alongside.
I'm thinking if you look at Archax as a cryptocurrency exchange alone, and when you go to a cryptocurrency exchange, you choose which blockchain you want to deposit, and it creates a wallet then. Is that the same way that Archax works?
For our cryptocurrencies, that's the same way it works.
Okay, so for the Hedera blockchain, do you guys have an individual wallet for every user already, or only when they click deposit or they buy these types of funds?
I'd have to check that, but I'm pretty sure that at the moment they're just pooled into a centralized account.
Okay. Because what I was trying to get at there is the benefits to the Hedera blockchain when it comes to this BlackRock fund being on Hedera. What are the biggest benefits for the blockchain itself when it comes to having these types of assets on chain? Is it more users creating a wallet for Hedera? Is it the transaction fees for moving these types of assets back and forth? Would it be something else that I'm not thinking about right now?
No, it's a good question. So, most chains, I think, want activity. They care about, total assets on chain and, assets lent on chain or whatever it might be. But what they really care about, at least from my experience, is transactions. And from that
Okay.
respect, an exchange is probably not an exciting proposition because most of us, whether it be Archax or Binance, we hold assets and they rarely move. However, we're on the start of a journey here where every single transaction that happens out there is going to move on chain. So whilst Artax doesn't do every transaction on chain, I think the future world is where every single transaction on the exchange happens on chain and moves between wallets, like you see in DEXs. And that obviously is thousands of transactions, maybe millions of transactions a day. I mean, we do about 1.6 million transactions at the moment, and we're right at the start of our journey already on chain. So it gives you an idea of the types of messages and orders that flow around. And then if you
Yeah.
think about everything that happens in the finance world through, transfers, payments, repo markets, settlement of collateral, transfers of margin payment, FX markets, wherever it might be, the number of transactions that happen every day on chain is huge. So really,
There could be an
I think what the
influx of transactions.
the blockchains need to focus on, demonstrating that they are appropriate for institutions. And I think they do that by maintaining credibility, having a good offering. And, I think we're starting to see overcoming some of the early concerns around regulations with public blockchains. You've got good private blockchains like kind of Canton Daml that are pretty much getting some traction. And also you're starting to see more institutions lean into chains like Hedera, Avalanche, Ethereum, as well. So, and Ripple's just working on XRPL. I mean, even Tether the other day launched their own tokenization platform. So, I think everyone's looking into this space with interest because they know that the traditional finance market dwarfs the crypto market, by a factor of a lot, thousands.
Right. Now, to close out this interview today, I just want to get your opinion on I seen a interview of Larry Fink talking about tokenized assets on chain in the future. Have you seen that video yourself?
Oh, yeah, we've seen it and quoted it many a time.
Okay, so what is your opinion on his vision? Do you see tokenization of assets across the board to where that whole industry transitions on chain?
I mean, yeah, he's entirely right. We set up Archax in 2018. We had the vision before that. There were others out there that had the vision before that. 6 years ago, we were probably a bit stronger than most in saying every single asset is moving on chain, and I believe it more strongly now than I ever did. I think Larry's been slightly behind on that front, but he has the ability to move markets somewhat easier than I do. What I
Right.
love about what they've done though is they said it. They launched their Bitcoin ETF, most successful ETF I think they've ever launched. They've absolutely been trailblazing with that. Because of the size, that probably means that most institutions on the planet who liaise with BlackRock now have some sort of connectivity into this product. They've worked on the build product recently with Securitize, so you know, quite their role there, but they were definitely involved in, and they've invested in a tokenization company there. And then they were aware we were doing this, so fair play to them. They're not just sitting on a stage saying it to show that they're innovative. They're actually doing it. I mean, we speak to big audit firms all the time, and they're always out there posting that they're innovative, but they refuse to work with crypto companies. The same with banks as well. A lot of banks out there refuse to give bank accounts to fintechs and cryptos. It winds me up all the time that they talk about innovation. So, fair play to BlackRock. They're sitting up there saying they'll do it, and they're not just doing it for their clients or their share price or whatever. They're actually doing it. So, kind of applaud them for that.
Okay, tell the listeners where they can learn more about Archax, your social medias and your website.
Yeah, so archax.com is our website. New one coming soon. We're launching a new platform soon as well, around the end of May. So keep an eye out for that. Archax EX and at Archax Crypto as well. The former slightly more formal, the latter a bit more research based. And obviously I'm at Grodfather. So if you ever want to know anything about us, reach out, and hopefully we'll have some more chats in the future as well.
All right, great. I appreciate you taking the time to clear the air and be on the show today. I really appreciate it.
No, thanks for reaching out. It's great to be here. Thanks, Joshua.
All right, boy. Have a good day. Nice to meet you.
Cheers. Bye.
The Crypto News Podcast with your host, Joshua Roomsberg. Follow and subscribe today.